What would be a shock? Because it feels like the more and more they're talking about keeping things stable and keeping things steady, the more antsy the market is getting. It almost feels like it's a build-up to something bigger. How do you avoid that?
Well, as a central banker, you just got to ignore the noise and just keep with your
That's a very
trajectory.
Jay Powell answer.
The market gets antsy and then it forgets about it. So I think really the BOJ needs to stick the course here. Now, the feed through to the treasuries is interesting because there's this narrative in the markets that says if the BOJ tightens, you're going to see Japanese asset managers, life insurance companies dump their treasuries and buy JGBs again. Don't expect that because most people in Japan expect the currency continue to weaken. We haven't seen that so-called repatriation flow really kick in because there is this view that, well, the yen is not going to strengthen all that much. So with yields where they are in the US, you're not going to dump treasuries and buy JGBs.
Take us back to the fundamentals from an economist's perspective then, Frederic, the fundamentals around the Japanese economy. Because here we talked about this at the top of the programme, and we have many times a central bank moving in the opposite direction to many other Western central banks at this time. And what is the justification for that in the data? I mean, clearly the Japanese inflation story has been very different and the wages story has been very different. It's taken some time to bring those things up to a level the central bank is happy with. But given the scale of the difference in monetary policy, is that justified by the data?
It is to some extent. We have inflation that we haven't seen in decades in Japan. We see a tightening labor market that's new despite the demographic issues. We see now shortages in labor. Wages are going up. So there is a justification. But remember, this is about normalization of monetary policy. I wouldn't call this tightening by any stretch of the imagination. And you could actually argue that nominal neutral rates in Japan are probably somewhere around 1.5%. They aren't zero anymore. So even if the Bank of Japan raises interest rates by 25, 50 basis points, it's still going to be highly accommodative. It's not tightening a la Fed, a la ECB. So that's why it's more of a normalization. They should take the chance while they have it, while inflation is up.